Have a look at hog markets this week with Iowa State Extension livestock economist Schulz. For the 9th straight month, the U.S. pork production in August was above year-ago levels. Producers have been rebounding from the porcine epidemic diarrhea virus that ripped across the country in 2013 and 2014. The recovery has shown in each of the quarterly hogs and pigs reports this year, with inventories higher than the previous year. It was further emphasized in September's report released last week as the USDA tallied the total at 68.4 million head in the United States, the highest since quarterly estimates began in 1988. We talked with Lee Wednesday morning and started by asking how surprising that was.
Well, I think it isn't all that surprising. We've seen all hogs and pigs, record inventory larger than the September 2008 record there. If you look at the market hog inventory, larger than the September 12 record inventory. But again, not all that surprising given expectations coming into the report. We knew we were going to have fairly large pig crops. We knew that likely a little bit of increase in the breeding herd. And again, I think, we've put the porcine epidemic diarrhea virus behind us. Also we're seeing the lowest feed cost since 2007. So I think, not all that surprising given, that we are really back on track as far as herd growth and productivity levels.
I'll ask you to go further on one of those points, the breeding herd and this report. What does it show us about farrowings into fall and into winter?
Well, I think if we look at the breeding herd, up 1.1%, I think it really shows that producers are really making a measured and calculated, emphasis on expansion here. I think we are seeing farrowing intentions below year-ago levels, but again, we need to put those year-ago levels into context given the large farrowings we've seen year ago due to the impact of PEDV. So again, I think, farrowing levels are fairly, in line with what we've seen historically, given, the larger breeding herd. I think that is expectations that we are going to see large or potentially record pig crops in the coming quarters.
So has herd expansion been appropriate to PEDV, or have producers gone above or below what you thought they might do or what the economics would support?
I think it is very much as expected. When we see the impact of PEDV, producers immediately responded by increasing carcass weight. So that really helped mitigate the impact of the lost slaughter numbers. And as time went on, they also were increasing the breeding herd levels, given really the incentives to do so given the profitability levels. Now we're seeing, increasing breeding herd and farrowing intentions, rather large given historical levels. But I think that shows that, expectations that this is a very bullish situation as far as feed costs for the hog industry, as low as 2007 levels. And I think there is still some profits to be made as we go into 2016.
We've seen pork production levels for each month above the year-ago levels. What does that mean for the consumer in the grocery store? Do prices get even cheaper?
Well, prices are down about 9% compared to year-ago levels. That's not too all that unexpected given the increased supplies of pork. And we're likely to see larger pork supplies here in the fourth quarter and into the first quarter of 2016. All else equal, that would suggest that we would see lower pork prices. But I think there is a lot of other factors to keep in mind here. We have the beef supply, relatively tight supplies. It's a growing supply, but that's going to keep beef prices relatively high and pressure pork prices up. On the other end of that, we have increasing broiler supplies, which would put some downward pressure on pork prices potentially. Also, when we look at international demand, we've seen, for the most part, we've seen it be a bit of a drag to pork demand here in 2015. I think there is some indications that international demand will pick up a bit as we're going to see larger supplies and lower prices. But I think we could see pork prices at least stabilize here in the next quarter or so and potentially start to come down even more in 2016.
Yeah, tell me where market prices are now and how they've impacted break-evens.
If we look at market prices, I like to look at them comparable to year-ago levels. We are about 25% below year-ago levels when we look at the futures prices for the fourth quarter. As we get into 2016, those prices could be slightly higher than year-ago levels in 2015. If we look at break-evens, we still are above break-evens on a farrow-to-finish basis. Break-evens in 2014 were about $74 per hundredweight. 2015, 2016, they're about $65 per hundredweight on a lean basis. So I think, profitability levels going into 2016, I think we're looking at that about $10 range on a per head basis for fair to finish.